Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, I understand that there was a market sentiment reversal yesterday, right?
Yes, there was a market sentiment reversal yesterday. It was characteristic that we saw a more cautious sentiment in the markets. I would dare to say that worries for inflationary pressures within the US economy resurfaced once again. I would also note that we had some hawkish comments by Fed policymakers, especially St. Louis Fed President Bullard, which also tended to enhance this sentiment somewhat. Albeit, we have to note that the Fed's intentions have already largely priced in by the market. Overall, the US dollar tended to gain across the board. It was, in my opinion, more evident against the Aussie. We have to note here that we had also a number of releases yesterday, which were not so good for the US dollar, but nevertheless, the market sentiment and the fundamentals overcame the negative releases. And we're talking about the construction data here, where the building permits number dropped, as did also the housing starts number. And we also note that we had in the Asian session the release of the Australian employment data. Now, there was some disappointment for the drop of the employment change figure, which dropped more than expected. Nevertheless, Australia's unemployment rate remained unchanged at 3.5%, which tended to imply that the Australian employment market remains rather tight. Overall, though, the rise of US yields was maybe the main characteristic evident that the market sentiment had been pushed towards a more cautious side.
Mm-hmm. And how did US stock markets react?
Well, US stock markets actually dropped yesterday. That would be a breaking of a two-day winning streak. Mm-hmm. And definitely they dropped due to the fundamentals. The earnings reports were overall good, solid. We had better than expected results for Procter & Gamble, for example, or for IBM. Maybe there was some disappointment for Tesla's revenue figure for Q3 as it did not reach market estimations. And there is some degree of uncertainty about Tesla right now. But nevertheless, all three main indexes were in the reds: the Dow Jones, NASDAQ, S&P 500, all of them. And that tended to practically underscore also the cautious sentiment which we have mentioned before. Mm-hmm. There are wide worries for a possible recession in the US economy. There are also wide worries for a possible acceleration of inflation or for inflationary pressures to persist despite the hiking of the Fed.
Mm-hmm. And how about gold's price?
Gold's price dropped. I would dare to note that the strengthening of the USD as well as the rise of the US yields tended to weigh on the non-interest bearing precious metal. Overall, though, I would note that the drop of gold's price yesterday was another confirmation of the bearish tendencies the precious metal has over the past 2 weeks. So it comes as no surprise. Maybe the drop may have been a little bit wider than what was expected, but at some point we saw, or we expected, that the precious metals price would continue to drop given the strengthening of the USD. There was a recess practically on Monday and Tuesday, yet the bearish outlook is still present for gold.
Mm-hmm. Across the Atlantic, is the UK government still on the shaking ground?
Actually, it is. Now, there was some developments here. There was a development that UK Prime Minister Liz Truss had stated that she made mistakes, but practically she will not quit. I would dare to highlight also the resignation of UK's in a minister which practically highlighted the uncertainty. It's the second major minister which resigns from the UK government. Actually, the first one was the finance minister was fired. And there's wide uncertainty about the future of the UK government. For the time being, in the polls, Labour Party is ahead by some 30 points. YouGov has rated Truss currently as being practically the most unpopular leader the UK has ever had since YouGov has started counting. So it's a big issue whether the Prime Minister will be able to continue in her duties in office over the coming months. For the time being, things are not looking that good, and that could weigh on the pound somewhat, as it could create some uncertainty here. Now, there has been some speculation also for a possible replacement by Jeremy Hunt. That's a possibility, definitely. However, at the same time, I would note that it's way too early.
Across the world now, is JPY still weakening?
Yes, JPY is still weakening against the US dollar practically. Against the euro and the pound, JPY had some gains yesterday. So we're highlighting practically the pair USD JPY, which has reached in today's European session, if I'm correct, 150. That would be 150 yens per dollar. And it seems also to be the case that the ultra-loose monetary policy of BOJ, which may have been also the root of JPY's weakening, is set to continue. It was characteristic that we had BOJ board governor Adachi, which more or less stated that the settings, the monetary policy settings of the bank are to remain unchanged. It would be premature to discuss the idea of a possible tightening. Also yesterday we had some comments by BOJ Governor Kuroda, which he mentioned that the weakening of JPY is bad for the Japanese economy, as that hinders practically planning and investing for Japanese for Japanese businesses. At the same time, I would expect the dovish policy to continue. The big question is whether the Japanese government will be stepping in to defend the yen or not.
And what's on the calendar for today?
Well, we have a number of releases. We already had from France the business climate. It improved a little bit, but overall there was no market reaction for the euro. In the American session, I would be highlighting from the US the weekly initial jobless claims figure. It's expected to rise slightly, and that could more or less imply that the loosening, the easing of the US employment market is continuing. I would also be noting the Philly Fed Business Index is expected to improve from -9 to -5, but still it remains in the negatives, and that's not exactly encouraging. And other than that, I would be also noting the existing home sales figure for September, which is expected to drop by 100K and could weaken the US dollar, as that would practically reaffirm a slowing of the interest in the real estate sector of the US. Other than that, I would be noting that we have a number of speakers from the US. We have Philadelphia Fed President Hager, and I would also be noting Fed Board Governor Jefferson. That would be in the American session today. During tomorrow's Asian session, we are getting from New Zealand the trade data. Now, New Zealand has a trade deficit of around 2.4 billion Kiwis. Now, should that be maintained in the negatives, that would imply practically that New Zealand's economy has suffered further from its international trading transactions. And I would also be highlighting from Japan the CPI rates there for September. I know that JPY does not react much on financial releases, but on a macroeconomic level, it's very interesting to see whether inflationary pressures in the Japanese economy have accelerated further, which could be placing more pressure on BOJ to start tightening its monetary policy.
Great. Any final comments?
Well, once again, I would be noting oil, and it was interesting to note that WTI's price was on the rise yesterday. Oil traders had a surprise, as practically the EIA weekly crude oil inventories figure showed a drawdown of around 1.5 million barrels. The surplus reported the week before was expected to drop, yet remain in the positives. It didn't. And that may have also provided some support for oil prices. At the same time, I would be noting that we mentioned that yesterday as well, the strategic release of US oil reserves is still a big issue for oil prices.
Great. Thank you, Peter, for your time and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome to the technical analysis part of the presentation for today. I have to tell you guys that the prices of the trading competition, the cars are pretty good. Anyway, in front of your screens, we have the 4-hour US dollar index chart. Mind you that all charts which are to be presented, unless otherwise stated, are to be of the same time frame, the 4-hour time frame. Now, with no time to waste, we note that there was a rise of the US dollar, breaking above the 112.10 resistance line, now turned to support once again. And interestingly enough, the rise as such practically respected the slightly downward trend line, which we had tried to draw yesterday. And today's peak practically reaffirms it. So we have one peak, a lower peak, a third peak. So we have a downward trend line, given that we have also a trough, a lower trough, and even lower trough, and still dropping. So we tend to maintain a bias for a bearish tendency as long as the price action remains below the downward trend line. There's a catch here. Let's not be so hasty. And we note that also the downward movement of the RSI, of the 20 moving average also tends to confirm that. Yet it's about to meet the 100 moving average, which shows as an upward trend, and that's about to collide. Now, the catch is that the RSI indicator is practically above the reading of 50. It's pretty near, but the fact is that it's still above it. So that may imply that the bearish tendencies are not as strong as we have suspected. So we may see the price action rising, breaking the pre-mentioned downward trend line, and remaining between the 113.45 and the 112.10, and a sideways motion between the pre-mentioned levels. Let me make some small corrections here. It's just about placing so everything becomes more visible. On the other hand, should the bullish tendencies be maintained, we may see the price action breaking the pre-mentioned downward trend line, signaling a change of trend. Yet we would require also clear breaking of the 113.45 resistance level. And practically, the price action of the dollar index to start aiming for the 114.70, a level which provided resistance practically on the 28th of September. It's also the peak of the peaks for the past 20 years. It would be interesting to drill out to the weekly chart. Oh yeah, in the long term we have still bullish tendencies, and the 114.70 is definitely the peak. It is. Okay, let's drill down to the daily chart. Now the daily chart confirms the upward movement. So this stabilization here and the slight bearish tendencies which have started for the time being in the long term make no difference. But if we drill down to the 4-hour chart, widen it, readjust it, we see that there are downward movements which should not be neglected. It should be even more clear to see in the 1-hour chart, like here. You can see the stabilization slowly dropping. Interesting. Now, in case we see some bearish tendencies intensifying, we may see the price action dropping, breaking the 112.10, and start aiming for the 110.80. And that could imply practically an acceleration of the bearish tendencies. And I would like to draw a channel here. In this case, the channel has been broken, but actually, it's not so much of a channel, as practically you can see that there is a widening of the spread here. Doesn't count. Let's delete this. Okay. Now, should the best take over, once again, we expect the price action to drop, similar fashion like here, break the 112.10, and start aiming for the 110.80. The big question is, in my opinion, what's going to be happening in the American session. We may see a make or break situation for the direction of the US dollar index appearing, and I think the American session may be more decisive than the European one, which we are currently in right now. Okay, let's have a look now at EUR/USD. EUR/USD, which dropped slightly, but slightly, quite evidently, my mistake, sorry. Yep, the break was yesterday in the European session. So we saw EUR/USD dropping since the Asian session yesterday, finding some support on the 0.9770. Actually, that could be a little bit lower, somewhere here, and that would be the 0.9755. In my opinion, given that the pair has respected the S1, even push it just slightly lower, I tend to maintain a bias for a sideways movement. Definitely between the 0.9870 and the 0.9755. Should the US dollar regain its bearish tendencies, we may see the pair rising, testing the 0.9870. Now, for a bullish outlook, we would require a rise of the price action of Euro USD, a clear breaking of the 0.9870, and for it to start aiming for parallel level. Note that the RSI indicator is running just below the reading of 50. It's actually at 48 right now. So it may also imply a slightly indecisive market here. The lower Bollinger Band, which is rising, the upper Bollinger Band is dropping. So we see a convergence of the Bollinger Bands, but they are still pretty wide apart. The 20 moving average, though, was able to cross the 100 moving average, and that would be implying practically a rise of prices. Okay, now should the bears take over, we may see the price action dropping, breaking the 0.9755 and start aiming for 0.9665, a level which provided support practically here, and that would be the 12th of October, as well as here, that would be the 29th of September, and some resistance on the 27th of September. So it's pretty valid level. I would be keeping that. And should the bears take over, we may expect a test. I wouldn't be surprised to see a drop this wide as yesterday. And that would be something as low as here. Let's have a look at the distance. That was of 117 pips, dropping 117 pips lower would be exactly at S2. Okay, let's have a look at GBP/USD. GBP/USD, which is dropping, no sign of a reversal. Like, say, for example, in the Euro USD, you can see that the price action bounced on 0.9755 and edged just a bit higher. On the contrary, in cable, we saw the same stabilization, but the price action continued lower. Slightly, just slightly. But that would be also due to the fundamental differentials between the euro and the pound, as the strengthening of the US dollar may be on the rebound. We have seen that in the US dollar index, rise and stabilization. Back to the cables for our chart. Now, should the bears maintain control and should the downward trend line, incepted practically since yesterday, hold, we may see the price action, let's widen this a little bit, maintaining its downward motion, breaking the 1.1145 support line, this one, and start aiming for the 1.0925. 0925 is a pretty valid level given the reversal of the downward motion on the, let's have a look, the 12th of October, back to an uptrend. Now, for a stabilization of cable, we would require a clear breaking of the downward trend line guiding it, which we have just drawn, and the price action to remain practically between the 1.1145 and the 1.1350 in this area here. On the contrary, a bullish outlook would require definitely a clear breaking of the downward trend line, signaling a trend reversal, but for a bullish outlook we would require also a clear breaking of the 1.1350 and the price action to start aiming for the 1.1495. Now it sounds a little bit distant, but if you see the price action, how volatile it can get here and here and even here and even here and here, it's something which is doable. Okay. On the other hand, we have to note that the RSI indicator is dropping. It's actually below 50 and dropping. It's currently at 42. So there may be some slight bearish tendencies still present for the pair. Let's move on to USD/JPY. Let's readjust the labels just a bit. Our support and resistance lines still stand. There has been some stabilization of USD/JPY just below the 150 level. And I would note how the pair stabilized after hitting on the upper Bollinger Band. It's slowly creating some further distance between the upper Bollinger Band and the price action. However, we need more before we see the bulls taking over. By the way, we have a question in the chat. The question is about gold. Definitely, we have gold on the program. However, it's at a later stage. For the time being, we're still in FX pairs. We have another 2 FX pairs to cover. Sorry, 3 FX pairs to cover, and then we will be for gold. Just bear with me here. Now, for the time being, we tend to maintain a bullish outlook for USD/JPY, and the price action is expected to rise after hitting the upper Bollinger Band. Sorry, the upward trend line, which has been instigated since the 11th of October, in which case we may see the price action hitting the 150.75. Now, some of you guys are discussing the idea of the 150 level being another resistance line. Yes, could be. In my opinion, though, the bullish sentiment is to continue. Mind you that we have an RSI indicator which is clearly above the reading of 70 and slightly dropping. On the one hand, that tends to imply that the bulls are still in control. On the other hand, though, I would also be highlighting the risk of a possible correction lower, as the price action may have reached overbought levels. On the other hand, there is a correct comment here about, yes, the viewer is practically asking that the RSI indicator is already above 70, and he's already above 70 since, actually it's not since, yeah, it's since the 12th of October. So maybe the worries for a possible correction lower are overstated, could be, in my opinion, but they're still present. And a correction low of USD/JPY should not take us by surprise. Now, should the bulls maintain control, I would expect the price action to near, if not even breach, the 150.75 resistance line. On the flip side, a stabilization of the pair would be signaled by breaking of the upward trend line we have mentioned before, and the price action to remain between the 150.75 and the 148.90. For a bearish outlook, I would require a breaking of the pre-mentioned upward trend line. However, I would also require breaking of the 148.90. Should there be a violent bearish movement, say for example in the case we have a market intervention by the Japanese government to defend, or even by BOJ, to defend JPY, the volatility could be high. We can see that in the last market intervention. However, I would expect volatility to be even higher. Why? Because the last market intervention operation of Japan was practically erased within a couple of days. Let's have a look at USD CHF. USD CHF, which is on the rise and is currently testing the 10050. It's revolving over the past 20 hours around it. In my opinion, there's still some bullish sentiment left, given that we have an RSI indicator which is pretty high. It's at 59 right now. So we may see the price action advancing further and aiming for the 1.0120. On the other hand, though, there was no clear break of the 1.0050, and we may see the price action continuing to revolve around it. That would imply stabilization. A bearish outlook, we would require a clear distancing from the price action from the 1.0050 and start aiming for the 0.9920. Let's have a look at AUD/USD. AUD/USD, which seems to have stabilized and has stabilized between the 0.6195 and 0.6345. So in the short term, there is a bias for a sideways movement. Also, there is an indicator which is running along the reading of 50, tends to imply a rather indecisive market. On the other hand, we have a downward trend line which is still valid. So there may be bearish tendencies, especially once the price action meets the downward trend line. I think that would be more decisive. And it would be interesting to see in the next 24 hours whether we have practically a meeting of the two and whether the price action will be able to break the downward trend line. Now, should the downward trend line be broken, we may see a sideways movement being verified between the 0.6345 and the 0.6195. Should the price action hit the downward trend line as a ceiling and move downwards, possibly breaking the 0.6195 and start aiming for the 0.6110, that would imply a bearish outlook. Finally, for a bullish outlook for AUD/USD, we would require clear breaking of the downward trend line, the 0.6345, and the price action to start aiming for 0.6530. Okay, let's have a look at USD CAD before we move on to gold as requested. USD CAD, which is also in a sideways movement, in my opinion, it's even clearer. There's no downward movement, no downward or upward trend line guiding the pair. The last one, let me make this clear, has been broken. And it was argued that there was an upward trend line which actually existed for something like this. But it has been broken. Even a shift to the right, still broken. So the stabilization of the pair is beyond question. And I would expect it to maintain the sideways movement between the 1.3835 and the 1.3660, given also the RSI indicator, which is at the reading of 50, also implying a rather indecisive market. On the other hand, though, a bullish outlook could force the price action higher, breaking the 1.3835 and start aiming for the 1.3975. Such a scenario could play out should the US dollar strengthen substantially on fundamental level. It was characteristic that even the better than expected CPI rates of Canada were not able to move the loonie, to strengthen it. You can see the price action being sideways here. Nevertheless, should the CAD gain the initiative over the US dollar, say for example in a strongly positive risk-oriented market sentiment, we may see the price action of USD CAD dropping, breaking the 1.3660 and start aiming for the 1.35. Let's have a good look at gold, XAU USD. XAU USD, which has dropped lower We're going to have to find new support lines. The bearish outlook is definitely still present. The question is how low it can get. And let's go hunting for a new support line. Let's go back in the chart. I'm afraid we're going to have to use the daily chart here, but just to see if we're lucky. Yeah, definitely. Daily chart. Here we go. So we had a true here, and that was on the 1st of April 2020, 2.5 years ago. I'm not arguing that it's as valid, but still I'm keeping this. It could be even a little bit lower. Here we have a double touch here, one here, and here's a resistance line. Seems more valid. I'm keeping this one. When was this? This was on the 28th of February 2020. Okay, so let's draw this in green, and that would be the 1560 support line. It's actually at 1562. I'm going a little bit lower. Drilling back to the 4-hour chart. Let's readjust the levels. Let's correct also the labels. Now there's a big question on the validity of the S1. In my opinion, despite the correction lower at this level, a little bit higher than the 1615, the S1 at 1615 still holds. I find this level more accurate and more strong, as it was able to turn back a wider downward movement of the precious metal and reverse it. It was characteristic how the precious metal jumped. Excuse me. Let's correct also the label so we have a nice glance on resistance support levels, making a start with the final resistance line at 1685. 1660 being the second resistance line, 1640 first resistance line, 1615 the first support line, 1585, and final support line being placed at 1560. Tuck this in. A direction of precious metal downward, and we maintain a bearish outlook for the precious metal as long as it remains below the downward trend line. Even a rise and a slight testing of the 1640 resistance line wouldn't change our mind. The price action has to break above the downward trend line, which was incepted since the 7th of October. Nothing less. For the time being, we remain bearish. Mind you, note that the price action of gold corrected higher after flirting extensively with the lower Bollinger Band. On the other hand, the downward slope of the 20 moving average, the median of the Bollinger Bands, tends also to imply a bearish trend. Also note how the downward slope is evident in the 100 and the 200 moving averages, also supporting the notion. On the other hand, we have gold's price rising after the RSI indicator hit the level of 30. It was very, very clear that traders may have been worried that the precious metal may have gotten into oversold territory and corrected higher. Yet it's still quite below the reading of 50. It's actually at 37, 38. And that tend to still imply some bearish tendencies. Should the bears maintain control, we may see the price action dropping, initially testing the 1615 support line, breaking it. It would be a prerequisite, in our opinion, for a bearish outlook, the breaking of the 1615, and start aiming for 1585. That would be $30 distance. It's a distance which could be covered easily. See that we had this level, this candlestick, which was at $39.40 distance, which was covered within 4 hours. So practically the volatility of the precious metal could cover it easily within 4 hours. On the other hand, a stabilization of the precious metal, let me extend the downward trend line a little bit, would imply the respecting of the 1615 support line, which provides support here, and on the top side the 1640 resistance line. And definitely would require a clear breaking of the downward trend line, signaling the change of trend. Now, should the bulls take over, however improbable that may be, it's still a possibility, especially should the US dollar weaken. Mind you that the weakening of gold's price, the drop of gold's price, was fundamentally explained mostly by the strengthening of the US dollar and the rise of the US yields. It was characteristic how the 10-year yield reached levels not seen since 2007. It was at 1.48, if I'm correct. 4.48, sorry. So anyway, the rise of the yields tended to weigh on the precious metals price as it has no interest. So the alternative safe haven of bonds becomes more attractive as it becomes more lucrative. Nevertheless, should the dollar weaken and yields drop, however improbable that may be, we may see the price action rising, breaking the 1640, breaking definitely the downward trend line, and start aiming for 1660. 1660, I know it was a previous support line, yet its role has been reversed. It was interesting how the level was tested practically on the, let's have a look, the 18th, that was the day before yesterday of October. It would be more evident the 1 hour chart. Let them drill in. Here it is. Back to the 4 hour chart. Once again, bearish outlook still present, and we would expect the next test of gold's price to be on the 1615, the previous low, which reversed the downward motion on the 29th, 28th of September. Sorry. Okay, let's have a look now at US stock markets. By the way, continue to feel freely to send any questions you may have. Now we have a level which is creating substantial commotion for Dow Jones. And that's the 30,455. It's interesting how if we drill down to the 1 hour chart, the price action has steadied and is revolving around it. It could go a little bit lower. It could go around 30,450. Let's have a look at that. But the touches here, back to the 4 hour chart and this one, I think it's still valid. I'm keeping that. Let's have a look. No change. Okay. Could go even lower. 400. A little bit higher. 400. I'm keeping the 450. Now, the level as such, the price action seems to have stabilized after the drop of yesterday. The cautiousness of the market practically forced the index lower. And now there are two big questions here. The first question is whether the cautious sentiment is going to be maintained in the American Open today as well. In which case, I would expect the US dollar index to break clearly the 30,450 to the downside, and I wouldn't be surprised to see a wider drop lower towards the 29,670. Some may argue that there is a continuation pattern here by a bearish flag. Could not be. In my opinion, it's a little bit overstated, but yeah, it could be argued. Now, in case we see a bullish outlook, say for example the price action rises, I would expect Dow Jones to rise and reach as high, if not even breach, the 31,118. We're talking about 600 ticks here. Could be 700. Could be doable. 730 actually. We can see that because we had similar movements in the past days. I wouldn't be minding this one. But definitely here we have one. And it's more clear if we drill out to the daily chart. You can see that we had 700 movements, 700 tick movements within one day. This was a 900 one. This was far higher. That was a 1400 one. So we have such movements for Dow Jones. It's nothing which should scare us. I mean, the distance between the S1 and the R1. It's coverable within one day by the volatility of Dow Jones. On the other hand, though, I would also be noting that the upper and the lower Bollinger Band are converging. That's a sign that volatility is lowering, practically implying that there may be a continuation of the sideways movement for the index. On the other hand, for bullish outlook, we have mentioned that it could reach as high, if not even breach, the 31,180. The RSI indicator is slightly above the reading of 50. I wouldn't count that as bullish yet. In my opinion, that's more a sign of a rather indecisive market. We are talking about US stock markets, which on a fundamental level are trying to navigate between the Fed's hawkish intentions, that's one, inflationary pressures, two, and the earnings season, C. In the greater scheme of things, we also have a wide uncertainty on geopolitical matters. And all of that tends to affect US stock markets. Anyways, now for a bearish scenario, we would expect the price action to drop, break clearly the 30,450, and aim for the 29,670, if not even breach it. On the other hand, one has to note here that we have a 20 moving average which is still moving upwards despite the drop in stabilization. which may imply slight bullish sentiment. Okay, let's have a look at Nasdaq. Nasdaq, which has risen, has dropped, and has bounced beautifully on the 10,985. Let's make the necessary corrections though. Definitely this has to go upwards. Now the question is whether we're going to be landing it here on this peak, a little bit higher, finding resistance as well here, or a little bit lower. Oh, that could be also pretty valid. Yeah, I'm keeping this one. This one because it has continuous tests to the upside, but it also has tests to the downside. And that would be the 12,000 resistance line in red. Let's have a look. Yep, it holds. I'm keeping that. Let's widen the chart. Let's make the necessary corrections. It's interesting to note that the initial rise, this one, of Nasdaq was not so intense as was Dow Jones. On the other hand, though, Nasdaq has a far wider number of shares included, so maybe less sensitive. On the other hand, though, shares included are tech companies mostly, which tend to have higher volatility and are more sensitive. The share prices are more sensitive. And 10,985, 10,720, and final support line now being placed at 10,310. There you go. So given that the price action has respected the S1, the 10,985 support line beautifully, actually could go a little bit lower, somewhere here. 10,970. We tend to maintain a bias for sideways movement of Nasdaq, but that's only temporary. Nevertheless, it's supported by the RSI indicator, which despite its drop seems to have stabilized somewhat around the reading of 50, also implying a rather indecisive market. So I would expect as an initial reaction the price action to remain between the 10,970 and the 11,300. On the fundamental field though, we may see a drop. We may see bearish tendencies being enhanced once again with the American session opening due to the cautiousness of the market. So in which case we would expect the price action to drop, break the 10,790 and aim for the 720. Actually 720, which rests here, I would correct it also a little bit lower, placing it somewhere here. And that would be the, give me a sec, 10,680. Should the bet persist, I wouldn't be surprised to see also the S2 be broken and the price action of Nasdaq start aiming for the S3 10,310. Let's have a look whether that's still valid. The daily chart open. Yeah, it is. I'm keeping that. Okay, that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello and welcome to another of our informative videos. Today we will take a look at the New York Stock Exchange. Basically, a stock exchange is a regulated auction market where stocks, bonds and other securities are bought and sold. The New York Stock Exchange, which dates back to 1792, is located in New York City. The NYSE has the nickname of Big Board as it is the largest, oldest and the best-known stock exchange in the world. The NYSE is owned by Intercontinental Exchange, an American holding company. It is the world's largest stock exchange by market capitalization of its listed companies at $30.1 trillion as of February 2018. The NYSE has over 2,400 companies, and its listing includes many of the big blue chip companies that have existed for decades, like Walmart, ExxonMobil or General Electric. The New York Stock Exchange still uses a largest trading floor at Wall Street in Manhattan to conduct transactions. It is used to rely on an open outcry system in which brokers shouted prices at one another. Now more than half of its trades are conducted electronically. The NYSE is open for trading Monday through Friday from 9:30 a.m. to 4 p.m. Following the September 11 attacks in 2001, the NYSE was closed for 4 trading sessions and resumed on Monday, September 17. This is one of the rare times the NYSE was closed for more than one session and only the third time since March 1933. On the first day, the NYSE suffered a 7.1% drop in value. After a week, it dropped by 14%. An estimated $1.4 trillion was lost within 5 days of trading. On October 29, 2012, the stock exchange was shut down for 2 days due to Hurricane Sandy. The last time the stock exchange was closed due to weather for a whole 2 days was in 1888. And in March 2020, the NYSE announced plans to temporarily move to all electronic trading on March 23, 2020 due to COVID-19 pandemic. The NYSE reopened on May 26, 2020. Thank you for watching.
Good evening, guys. Welcome to another session.
Seems like we have everyone from all around the world. Anyone in the Asia region? Good stuff, good stuff. All right, just keep it coming. Let me know. And if you have any questions or, any particular pairs or views or analysis that you like to get through, let me know as well. All right, my name is Jin. Let me just change that a bit. Thank you all for joining bright and early on time. Let's get started. All right, so we're here today with IronFX doing a webinar series, live trading session or live trading analysis today. So I will be sharing with you some ideas, some thoughts, what I think of the markets, what I'm expecting or hoping to see. So please remember the disclaimer still applies, is that the information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material is just personal opinion of the author, myself, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. All right. So what it really comes down to is that I will be sharing with you some thoughts, ideas, views of the market, how I see things could be heading towards. If you are going to be jumping into any trades, please make sure you do your own due diligence. Check your own analysis. All right, if it lines up with mine, great. If you do jump into any trades, make sure you check your leverage. Right, make sure you're not over trading, because what tends to happen sometimes is that we look at every chart and every chart looks like a possible trade opportunity, and then we start thinking that you can enter every trade, leads to over trading, and over trading leads to a big risk to the account. Okay, so in my years of experience of coaching people how to trade, I actually realized that it's not so much a bad trade or a weak strategy that destroys accounts. Is more about over trading and over leveraging that destroys accounts. Okay, so just make sure you manage your risk, check your charts, check your analysis, don't over trade and don't over leverage. With that as well, while I'm going through the analysis, if you have any questions, please feel free to put them into the chat. Let me know. I'll be happy to address any trading related questions that you might have. So let's get started. Take that away. How I actually approach the markets. I actually approach the markets a little bit differently from what I've seen most people do, is that the way I trade, I look into first looking at the news fundamentals. So I look at the fundamentals to tell or to get an idea of where prices should be heading, right? Where can prices go, where prices should be heading. And then after that, I look into the charts to determine, if I think that prices should be going up and the charts show me that it's going up, great, I'll be looking to buy. Or alternatively, if I think that based on the fundamentals, based on economics, prices should be going up, but it's actually trending towards the downside, what I do is I'll wait for it to bounce off a support level or retrace before I look for that buying opportunity. All right, so I look at both the fundamentals as in the news, and then after that, into the technicals or the charts. So what we had today, today being Thursday, 20th of October, again, my timing here is GMT plus 8 at 8:30 a.m. All right, so at 8:30 a.m. this morning, we had the Aussie employment numbers. It was 36.3K, expected at 25K, came out at a 0.9. So not a very good employment change data being released, but unemployment rate staying at that 3.5%. What else we have tonight? The US Philly Fed Manufacturing Index. It gives us a bit of a view of how the US production levels are. It was a minus 9.9%, expected to come out at minus 5, right? Not 9.9, and minus 9.9, expected to be minus 5. You can see that previously we've seen quite big drops in terms of the Fed Manufacturing Index here. So what could happen? I think that we might actually see a weak number here, maybe even a minus 6 or minus 8 number here, which could lead to some or further dollar weakness being applied. Okay, so I'm anticipating tonight maybe some dollar weakness. We'll look into the dollar index chart later on. With that said, next, I want to show you a little bit of the other news that's coming up as well. Tomorrow being Friday, we do have a whole bunch of Fed members speaking. Okay, we have the Chinese GDP numbers, could affect the Aussie dollar, but take it with a little bit of pinch of salt there. Tomorrow we do have the pound retail sales number and the CAD retail sales number. So you focus on, at this point, for tomorrow, you'll be looking at the CAD as possibly a little bit more volatile events coming up. Next week is going to be interesting. All right, next week is going to be very interesting because early next week on Monday, we have a whole series of PMI numbers to be released. PMI is the Purchasing Managers Index, right? Purchasing Managers Index, it gives us a view of the services industry in the Eurozone, the manufacturing industry in the Eurozone. It tells us whether markets are, or the industry is expanding or contracting. And you can see that if it's over 50, it's expanding. If it's under 50, it's contracting. Okay. So you can see here that the Euro manufacturing PMI data last month was a 49.6, expected a 48.7, came out at a 48.5, in well under that 50 level. So it's in that contractionary phase. And services PMI as well was 49.8, expected 49.1, came out at 48.9. So in that contractionary phase as well. If these numbers do come out in the contractionary phase on Monday, remember this is Monday next week, doing a bit of a planning ahead, we might see further euro weakness, okay, because it's showing contraction in the Eurozone in terms of the manufacturing and the services industry. For the UK as well, on Monday we have UK manufacturing and services PMI was 48.4. Looks like it might recover a little bit, right? Because last month we had 47.3, came out at a 48.5. So recovering slightly there in terms of manufacturing PMI and services PMI from 50 went to 49, right now back at that 50 level, bit of a revision to the 50 level. So it looks like we might see some level or slight good news in terms of the pound or the UK manufacturing and services PMI data. Okay, so again, Monday, expecting maybe a little bit of weakness in the euro dollar, and then some possibly brief strength in the pound. Okay, and then the US services PMI in under that 50 level, possibly looking at some weakness again. But these are small, relatively small news. We're going to see some fluctuation in price, but we're not going to see big price movements, right? We're not likely to see the big price movements because of this news. Where's the big price movement going to come from next week? It's not so much on Tuesday, but on Wednesday. On Wednesday morning, right, 8:30 a.m. GMT plus 8, we have the Aussie CPI. CPI is the inflationary data quarter on quarter. It was a 1.8. You can see that previously is a 2.1, expected 1.9, came out at 1.8. If inflation data, if the quarter on quarter inflation data for the Aussie drops, continues to drop, that might show some impact, right? It might show that the recent rate increases from the Reserve Bank of Australia is having some impact on slowing inflation growth, right? If it's slowing inflation growth, then that's going to mean that we're going to see possibly less or slowdown in further rate increases to come from the Reserve Bank of Australia, which could actually be a good thing, right? No more rate increases. We're not going to see that, might avoid a bit of a recession, avoid a bit of the economic slowdown in the Australian economy. Okay. Moving on from that, the big news event for next week is likely to come from the Canadian, the Bank of Canada, BOC, the Bank of Canada is looking to take interest rates from a 3.25% to a 3.75%. Okay, 50 basis point increase likely to come from the Bank of Canada. And why so is because you can see that just yesterday, oops, let's scroll back to that. Do that. So just yesterday, we had a Canadian CPI data being released, Canadian inflation data being released, and you can see that common CPI still climbing, right? Was a 6%, expected to slow down, 5.6, came out at a 6. Trimmed CPI actually takes away 40% of the most volatile CPI data, and it's still climbing or still sticky high. Was 5.2, expected to drop slightly, but it didn't, so it still stays at a 5.2. Okay, so because of this data that inflation is still high in Canada, that leads to the Bank of Canada likely to continue increasing interest rates from a 3.25 to a 3.75%. Okay, I'll show you what could happen there on the Canadian dollar when we look into the charts a little bit later on. So that's where I think the big fireworks will come on Wednesday for the Bank of Canada with the interest rate decision. And following on from that, we also have on Thursday, we have the Eurozone with their financing rate or the interest rate decision as well. Okay, so you can see here it was a 1.25%. Expectation is that, you can see here, 75 or 50 basis points increase. The ECB needs a significant rate hike in October. Okay, so we're likely to see a big increase or big interest rate increase from the Eurozone on Thursday. That's going to bring big news or big price volatility for the euro dollar. Okay, for moving on from that, US advanced GDP numbers, I think, after the Canadian interest rate decision, after the Eurozone interest rate decision, I think that we're not going to see too much of an event there on the US GDP. Okay, could ignore that a little bit because the euro dollar is going to influence prices more significantly than the GDP number. We do have a press conference following up from that. And then on Friday, right? On Friday, we have the Bank of Japan outlook report and monetary policy statement. All right. And then the press conference and a couple of news after that. This is likely to be the big event. I think that this could be the big event because the last time we had the Bank of Japan monetary policy statement, They didn't change anything. They kept interest rates at that minus 0.1%. But I'll jump onto the charts here now to show you what happened. All right. So far, so good. Any questions? Put it into the chat. Let me know if you're gathering good information so far. Okay, so while I load up the yen, let me know if you got any questions and if you're catching everything okay so far. All right, so this is a US yen on the H1 time frame. Let me just load up my chart. Okay, so this is the US yen on the H1 time frame. I'll just zoom out and show you what happened there at the last meeting. Let's go H4. What's the last one here? Okay, at the last meeting, which was in on the 22nd of September, we actually saw that the Bank of Japan, didn't change anything at that point. Policy still held the same. And then we had a key level there at that 145 level. Oops. Key level at 145. It tested once, got turned down. You can see tested once here. It went down. Tested again, and it dropped. Right. The next time it went up, it tested. It came as high as that 145.90 level. And then that's where we saw the Bank of Japan intervene, right? An intervention from the Bank of Japan. At that time, they were saying that the yen was too weak. It broke above that 145 level. And then we saw the Bank of Japan intervene, crashing the US yen down from 145.90 all the way down towards that 140.33 level. Right, a big move towards the downside. Pretty much about 560 pips towards the downside as an intervention from the Bank of Japan. However, that move towards the downside was quickly reversed. You can see price went all the way back up. Not only did it go back up, it went even higher. It broke above 145. Right now, and the market consensus is that the 150 level, which we have just hit, right? The 150 level was, or it's likely to be the point where the Bank of Japan could say that, hey, that's enough. Time to intervene again. We haven't seen, as much as it's gone up and hit that 150 level, we haven't seen the intervention from the Bank of Japan yet. What I believe is that they're likely to wait for a news event. For example, the policy decision on Friday next week before they announce or they take action to intervene into the markets. What that means is that it could be quite similar to what happened here at the 145 level. All right, we could see price test, turn down a little bit, test and turn down. So I'll zoom in a bit here to see. All right, we could see price test this level. Turn back, test this level, and then turn back down a little bit, test again, turn back down one more time to break above. What happened to my lines? Test, come back up, test again, come back up, right? So I think that we could see that happen. I think that we might even see the yen come very close towards that 151 level. So very similar to what happened the last time round. Right, the last time round, we were all expecting on the markets, we're expecting 145. It broke above 145. It came to 145.90 before a big drop. What I think could happen here is we're going to see it test a few times, break towards 151 before we see that big intervention to come from the Bank of Japan. All right, how I'm actually approaching the US yen right now is that I've actually have a pending sell limit towards the downside, right? I've got a sell order towards the downside. My order right now is placed at 149, just below that 149 level. I've got a tight stop loss at about 30 to 40 pips there. My take profit is 200 towards the downside. Okay, so every time, and I started this early this week. So what was it? Let me see. I did that on Tuesday. So on the 18th, right? On the 18th, I actually about that point that I had it there. After that retrace, I started thinking of that. So I actually had it at that point. Yep. So at that point, I had it at 148.50. I had it at 148.50. I was thinking that was a trial intervention. Didn't happen too strongly. So I was thinking whether, the next time it breaks lower, can we see a big move towards the downside? Didn't happen. It pushed higher. And then I just kept moving this order up. I just kept moving the order up. Right now, it is just below that 149 level. Okay, so what I'm looking for is that I know I won't be able to catch the full move, right? Even if it comes all the way up, I might have my order there just below 150, right? This is 150. I'll have it just below 150. If they intervene, I'll give up that much, but my trade could trigger. Very tight stop loss, and I'll see a take profit towards the downside. That'd be a very good one, almost 1:4 risk reward ratio towards the downside, just to try and catch the intervention from the Bank of Japan. All right. So every time price moves up, I'll just keep moving my order higher and higher. If it breaks above, I'll keep moving it up, just so that, once it turns down, I'll be able to catch that move towards the downside. All right. So that's my view for the US yen, anticipating and waiting for that possible intervention from the Bank of Japan. And why we think that it's likely to happen is because you can see here as well, everyone's waiting for it. The yen slides past key 150 per US dollar mark. Markets are braced for intervention. All right. I think that not likely it's going to happen today or tomorrow. Maybe. Right? But I think more likely, or it's going to have a bigger impact if it happens next week on Friday. So with that was the US yen on the H4 time frame based on the intervention. Let's look at the US CAD. All right, so US CAD right now at that 1.3740 level. Okay, we saw last night that we had the CPI data being released from the Canadians, and it was a bit of a mixed number, but we saw that inflation data was still high in the Canadians, and that's why we actually saw price bounce around with not much direction at that point. Okay, I'll take that away for now. The main levels here is that price has stayed below that 1.38 level, right? Because price has stayed below that 1.38, it could mean that the upside potential is a bit limited, right? Not that it's not going to happen, it could be limited. If it does push higher, it's going to be likely dependent on the dollar, on the US dollar to push price higher. How high can it go? The next key level is at about 1.3976 or 75. Okay, so I will only be looking to buy it up. I'll only be looking for this move towards the upside if price can climb and break above this resistance level, this 1.38 resistance level. Then I would be looking at a buying opportunity about 1.3830, take profit 130 pips towards upside, Stop loss just below that support level now, right? At about 40 to 50 pips, you're looking at a 1:2.7 risk reward ratio towards the upside. All right. However, if price fails to break above this level, all right, and we actually do see later into next week, the Bank of Canada increases interest rates 50 basis points. We might see further volatility. I'll be looking to see whether price could come down, break below this swing low here, this 1.3658 or 55 level, right? If price can come down, break below this point, then I'll be looking for selling opportunities at about 1.3620, so below 1.3620. Again, stop loss at about that 60 pips. Take profit maybe at about 100 and almost 120. You're looking at a 1:2 risk reward ratio towards the downside. And why is it here? Is because we have a support level there. Okay, so I might actually move this a little bit higher, just slightly less than 1:2. Okay, we could actually do that. So at about 1.3630, 120 pips towards the downside, 1:2 risk reward ratio, waiting to see whether what's going to happen on the US CAD, if it breaks below that support level or if it bounces and breaks above that resistance. In between right now, I think we're going to see this kind of price movements for the time being. Going to stay within this range, no real clear directions until the interest rate decision to come from the Bank of Canada. All right. Any questions so far? You guys getting everything all right? Good stuff. Fantastic. Okay, good. If you have any questions, please let me know. After looking at the US CAD, let's look at the euro dollar, because there is an interest rate decision to come from the Eurozone next week as well, or from the ECB next week. Right now, the euro dollar trading at 0.9779, right? 9779 or 9780 at that point. Yesterday, I can tell you that yesterday I was on H1 time frame. I was looking at the euro dollar as it broke below that 9820 level, right? So I saw this point as a swing level and as a bit of a support. You can see that it tested here and bounced up. It tested here and bounced up. I actually had a trade that I got into selling it down as it broke that support level. All right, so I sold it down, had relatively tight stop loss, about 30 pips. Stop loss at about 30 pips. Take profit was all the way down about 90 pips, or about 100 pips. No, wait, 90 pips towards the downside, right? Why there is because I had a support level there, right? So it dropped all the way. I was expecting it to drop all the way down. It came down, formed a couple of pin. I closed out at that point there. At that point there, right? So I waited, it dropped, thought it could drop further, but the indecision at that level there, decided to close out the trade. Also because I noticed that there was a bit of a interim level there at that 0.976, almost 9760 level. So I closed out my trade and I'm sitting there waiting to see whether it's going to drop further again. I got a question here is, what is the best time frame to do analysis? What I would say is that I think that most traders or most retail traders at this point are doing this part-time. You got a full-time job, you're not looking at charts all the time. So, I would say that you should be looking first at the H4 time frame, right? Look at it on the H4, get your support levels in, get your resistance levels in, identify why support and resistance levels is to identify the possible upside and downside potential, okay, based on the H4 time frame. And then if you can stick onto the H4 time frame to enter a trade, that means wait for it to break a level before you get in, right? Or wait for it to bounce off a level before you get in. If you can't, then you have your levels based on H4, and then you could look into the H1 to get into the trades. Right? So what I do, I look at H4, draw my lines, support levels, resistance levels, trend lines. Then I go into the H1 time frame to enter my trades based on the H4 support and resistance levels. When there are news or when it's a bit of a higher volatility event, then I'll look into the M15 time frame for shorter term trades or scalping trades. But I always suggest to most retail traders or most new to intermediate traders to stay away from the smaller time frame, right? Stay on the H1, try to avoid the smaller time frames because that gets a little bit more more volatile, more emotional, right? So stay on H4 and H1 should work for you. Hope I answer your question there. With that, I forgot what I was saying about this now. That's a euro dollar. Okay, so euro dollar right now, I'm looking, right? If later into next week we do see, and I'll show you again here. If later into next week we do see the rate increase and a relatively hawkish comments from the ECB, especially during the press conference here, what I could anticipate on the euro dollar, okay, getting back to the H4 because we're looking into next week. What I could anticipate on the euro dollar is that we might see a bit of a bounce, right? So I'll take that away. We might see a little bit of a bounce. You see it's formed a good support there. Wouldn't enter any trades at this point. I'll wait for it to either break lower or bounce back up close above this point for that upside move. Okay, to be extra safe for in terms of the euro dollar, your level here at about that 0.9880 level, you can see that it was a swing level here, right? We've got a bit of a reaction there, and then this points here. I'll wait for price. I'll be looking for price to possibly do that and break out, right? So I look for it to break towards the upside there. Okay, bounce around. It needs to break above that 0.9880 resistance level before we could see the euro dollar come up back towards that parity level again. Okay, zoom in out a little bit, back towards that parity level again. Could it go all the way to this 1.02 level? Possibly, but I think that for that to happen, you're going to see significant weakness in the US dollar, which seems to be a bit unlikely at this point. Okay, so I'll be looking instead whether once it breaks above that resistance, there's a buying opportunity towards the upside. About a 30 pip stop loss, about 100 pips take profit, a 1:3 risk reward ratio towards the upside there for the euro dollar. This is when it comes to the news decision into next week. When breakout happen, how to count stop loss for entry? Okay, good question. So in this case, like for this as an example, once, if we look for price to break above that resistance level, I still would always have my stop loss just below that support level. So it was a resistance level, now turned support. I always have stop loss below the support level. Okay, and then take profit towards the next resistance. Let's say that if you missed the breakout, you're a little bit late to the breakout, and then price was already up there, and then you come to the point where you realize that stop loss is too big. 65 pips is too big. What most traders would tend to do is to still stick with a 20 to 30 pip stop loss, a tight stop loss, hoping for a continuation towards the upside. I think that's very dangerous, right? Because we're going to see a lot of volatility. We're going to see price bouncing around. What could happen from there is that you might actually see price, see you entered there, bounce up, come back down, hit your stop loss before going up to it, so your take profit level. Okay, so I would still, even if you break out, consider whether I'm going to have a stop loss there. And if that risk to reward and the risk management doesn't make sense, then I would say, okay, I'm not going to enter the trade. It would be something that I would have just missed on, not enter that trade. Let's see what happens as price climbs up towards that parity level. Is it going to hit and retrace back down, or is it going to break above? Then I might have a better opportunity towards that 1.02 level. All right. So no matter what, I always want my stop loss either below the support level or above that resistance level. Right? Always below support or beyond the resistance level. So that's the euro dollar. With the news likely next week. With that, US CAD we've done already. Okay, then we look at the dollar index. Right, so the dollar index has been a little bit weird over the last couple of days. Is because it was trading at that 113 between, I can show you here, between that 112.85 level and that 113.50, about 113.50 level. Right, it was trading between this range, and then it tried to break up. Didn't happen late last week. It came back down, bounced back up, and then early this week it broke down from that 112.80 level, came down towards 111.85. Right, it came down towards 111.85. What we saw today or yesterday and today was last night was that it climbed back up, but it failed to sustain a move towards the upside, consolidated along this 112.85 level, right? So it's consolidating there, and that's also the reason why I'm looking at the US yen, I'm looking at the US CAD, the euro dollar we just spoke about as well. That it looks like it's going to consolidate for a little longer, maybe into this end of this week, still consolidate into next week. Then we're likely to see some bigger moves on, driven by the news and also the dollar index. Okay, so looking for a reaction here, I think what we could see is that price could trade lower, bounce back up, and then finally break, and then maybe even come in the longer term back up towards this 114.75 level. Okay, so I'm looking for this bounce or a bit of wide consolidation between 112.70, 112.85 and 111.85. Consolidate in this area before a possible breakup towards the upside. Could the US dollar break lower? Right, if it does break below 111.85, a bit, I think that's a little bit unlikely unless we see a lot of strength in the euro or in the pound, right, which seems a little bit unlikely. If it does break below 111.85, then we could see, right, you can see it right across here, that 110 level. We got a bit of a swing levels here, a good resistance level here, and then a good support there. So that's the reaction there, and a good support level here. If price does break below this point, then we could see the US dollar or the dollar index breaking lower towards 110. Okay. Any questions? Any other questions so far? Not yet. All right, great stuff. With that, one more thing I want to share with you, or a couple more things I want to share with you, is the pound dollar. Right, the pound dollar has been a little bit. Oops, not that. Right, the pound has been a little bit crazy. That news here, right? We saw a reaction there at 1.12 level, the 1.12, about 1.1230 level. That big drop, right? That big drop was because of the introduction to about tax cuts, biggest tax cuts in 50 years. Markets got concerned whether the UK government were being a bit too optimistic. They were going to cut on their revenue stream. That's why we saw the pound dollar drop so significantly, almost immediately down towards that 1.0360 level, right? Big drop towards the downside. And then because of that big drop, you can see this candle here. Okay, maybe not that one. Right, you can see this candle here. The Bank of England came out and said that they're going to buy long-term government bonds just to try and stabilize the markets. It did have a good effect because we saw prices continue because of the introduction and a slight intervention. We saw that price push back up, right? It came back up towards that starting point of where it fell, right? It pushed a little bit higher as the UK governments spoke about U-turning, right? U-turning on their tax cuts decision, right? So it pushed a little bit higher again, but then found a very strong resistance there. Okay, you can see found a very strong support and resistance level there at almost at 1.15 level, right? So it went up to that point, failed to break above, and now it's been wide consolidation, but overall still testing that 1.12 level, looking like we're going to see a potential drop towards the downside, right? So I would have this level there. So it's within this range. It's trying to figure out, is it going to push towards upside or the downside? In my view, I'm still looking for that downward move, right? So about 1.1140, very tight stop loss, about 40 pips there, just above that range. Take profit at about 180, almost 200 pips towards the downside, almost a 1:5 risk reward ratio towards the downside there on the pound dollar. If it does break strongly below this 1.1160 level, I'll look to get in at about 1.1140. Right, so I'll give it a bit more space, let it drop before I look to sell it down towards that level, that support level there. So looking for that similar move, right? That similar move that happened early October. Okay. If it does bounce back up towards the upside, for me, I'll be a little bit cautious. I wouldn't be looking to buy it up just because, as much as I feel that it can climb towards that 1.15 level again, there was one time that climbed very nicely. The next time following on from that, it climbed halfway and dropped strongly. Again, climbed halfway, dropped strongly, climbed a little bit more, but continued to drop. So I see that it looks like it's struggling, and we have a little bit of that downward channel to a downward trend line. So I think that we might see, even if it does climb up, it might struggle to climb strongly. I still think that we're going to be a bit more downside move. And I'll also share with you here is that if I take that away for now, you can see that we got a bit of a shoulder, bit of a head. All right, if prices do come up and then start turning back down, then we're going to get a bit of a shoulder there. with a good neckline at this point, right? So head and shoulder pattern formation looks like it might be forming. If we do see a bit of an upward move on the pound dollar, then looking for it to break below that neckline, we're going to see quite a good downward potential onto the pound dollar, right? Also formed with the head and shoulder pattern. Okay, so quite a lot of things there. On the pound dollar, I'm still looking for that selling opportunity. With the next one on the US Swiss franc, okay, I'll show you on daily time frame first. You can see that the US Swiss franc tested that 1.0066 level, right? So the last time it came up towards 1.0066 there, we saw a big downward move, came very close, we saw a big downward move again, right? And then it's formed a little bit of another level there. Okay, now take that away. We'll do that one there. Right, so it's formed a little bit of another double top there as well. Okay, so right now, the US Swiss franc is again back at that 1.0066 resistance level again. All right, what I'm looking for here is whether price could reject, show me a stronger rejection of that resistance, like what happened here the first time and also the second time, right? Rejecting that level, can we see a big downward move on the US Swiss franc back towards that support level there? We saw it happened here once, you know, this quite a strong support level at that 0.9556 or 555 level. Again here, and again here, right? So every time it's hit, it came quite close to that level before bouncing back up again. So I'm looking for, and this could be something that you want to prepare for, you want to put high on your watch list, whether price could shoot down. I wouldn't do it straight away, you know, give it a bit of space at about that 9926 level or below 9930. I have a stop loss about quite a big stop loss there, about 180 pips. But your take profit is at about 350. Yeah, almost a 1:2 risk reward ratio towards the downside. Remember, this is on a daily time frame. That's why we have got a big stop loss, a big take profit. This might be a trade that if it does happen, you will want to size down on it, right? Because it's a big stop loss, so you're going to size down on that trade. But we could see a big potential move, a potential big move towards the downside. What if it breaks above that resistance? Right, then you go to the weekly time frame. You can see that the next previous high was about 1.025 level. Oops. Right, so if it does break above, we're going to see possibly a bit of a limited upside potential. I wouldn't be looking to buy it up. I'll be looking for it to test that level and then looking to sell it back down, because you can see that again, back to the weekly, the last time it hit that level, it went straight down again. Okay, so I'm still looking for selling opportunities on the US Swiss franc, either reacting to this 1.006 level or towards that, if it does climb up, reacting to that 1.0240 level. All right. With that, looking at the what happened here. Last two charts, look at the Aussie dollar. Right, Aussie dollar not being very exciting at this point. We've seen reactions at that 0.6345 level, right? A test, a reject, test, reject. I was looking for this to test and reject towards, back down towards that 6171 level, but it came halfway, didn't happen. Now it's bouncing back up. So I'm still looking for that move, a test, and then that possible downward move. Okay, I wouldn't be looking to buy the Aussie up. There's no real reason unless we see that big dollar weakness come into play, but 0.6345 level seems to be holding quite strong. Okay. Then lucky last, Kiwi. Kiwi, same thing, very similar to the Aussie dollar. Right, we got a key support, key resistance level there at 5717, or even if I pushed it a little bit, about that 5725 level. Okay, so we're looking for it to come up, test that level. The next resistance level is at 5813 or 5820 level there. I think that we're likely to see on the Kiwi dollar a test, and then that rejection towards the downside again, back down towards that 5511 support level, that swing low, that previous swing low there. Okay, but you can see that at this point, with not a lot of news expected for the Aussie and the Kiwi, I'm a little bit less attracted to trading the Aussie and the Kiwi. I think a lot more opportunities on the yen with that possible intervention, on the pound dollar, on the US Swiss franc a lot, and especially the US CAD, you know, with the interest rate decision coming up. A lot more opportunities on those pairs rather than trying to force out a trade on the dollar index. Okay. At this point, any further questions as we come close to the end of the session? Any further questions? Alrighty, no, nothing yet. US CAD dropping, you can see it coming down, looking for it to test and stay within this range. We have both that buying opportunity towards upside and selling towards the downside, depending on how price reacts to those support and resistance levels. Okay. Okay, so if you have no further questions, I've gone through pretty much all the major currencies there. With the news, just bear in mind that we have a whole bunch of news release. Oh, look at that. Aussie dollar vulnerable near 30-month lows. Okay, so we're possibly looking at further downside there. Yeah, so just remember that we have a whole lot of news next week. Monday, going to see some volatility, but not big price movers with the PMI data. But we're going to have the CAD with the interest rate decision. We have the Eurozone with the interest rate decision. And then possibly some fireworks to come for the yen with the policy decision on Friday next week. Okay, so with all that said, I'll take an end to the session here. Remember, trade well, trade safe, and take care now. Thank you, Juha. I hope you had a good session. I hope you enjoyed the session. Take care now. Bye-bye.
Everyone, my name is Emily and welcome to today's video on the Nasdaq. So what is a Nasdaq? Nasdaq is an online global marketplace for buying and selling securities. It stands for National Association of Securities Dealers Automated Quotations. It operates 29 markets, 1 clearing house, and 5 central security depositories in the United States and Europe. Nasdaq has become the king of the modern stock market, and most of the world's technology giants are listed on the Nasdaq. Nasdaq was originally founded in 1971 to trade securities for companies that were not offered on a formal exchange. These stocks were mainly technology companies. Therefore, up to this day, Nasdaq is associated with technology stocks. Nasdaq does not have a trading floor like the New York Stock Exchange. Actually, the Nasdaq is the world's first electronic stock market. In the beginning, the Nasdaq wasn't exactly an electronic stock market as they didn't execute any trades electronically. They were actually more of a quotation service that allowed investors to electronically see the live prices of the different stocks listed on the platform. Executing trades was done manually, but Nasdaq soon introduced electronic execution as well. Over the next few decades, the Nasdaq introduced features such as automatically tracking daily volume to the electronic execution of trades. The Nasdaq was often referred to as an OTC market or an over-the-counter market, which refers to the trading of stocks that aren't listed on the major exchanges such as the NYSE. All buying and selling takes place electronically in the Nasdaq system. Basically, a buyer electronically sends his order to market makers who post the bid and ask prices for securities. Once the price is accepted, the trade is made online. In 2008, Nasdaq merged with Swedish electronic trading company OMX ABO. The merger was called Nasdaq OMX and lists over 4,000 companies with Nasdaq listing over 3,100 companies. The company changed its name to Nasdaq Incorporation in 2015. The term Nasdaq is also used to refer to the Nasdaq Composite, an index of more than 3,700 stocks listed on the Nasdaq exchange. These include technology giants Apple, Microsoft, Google, Amazon, and Tesla. Stock ticker symbols are used to identify a company and are usually up to 4 letters. Nasdaq Incorporation is listed on the Nasdaq stock market under the symbol NDAQ and has been part of the S&P 500 index since 2008.